Is just taking a bit of a review of the day as per the kind of regular practice now. I'll try and give a recap of the session as we go through into the European close. And really the last couple of minutes here has really caused the flurry of activity for the day. This has come after not Donald Trump, but Donald Trump Jr., like father, like son, has tweeted basically his conversations that have come to light over recent days about an email chain allegedly showing that Russia offered to assist the Trump campaign during the election. And so what you've had here is Trump Jr. to kind of plead his innocence and the push for transparency has basically submitted the full documentation of his conversations, of which is pretty condemning because the conversations follow the route of the Crown Prosecutor of Russia met with this chap saying that they offered to provide Trump campaign with some official documents and information that would incriminate Hillary and her dealings with Russia and would be very useful to Donald Trump. And then this is a conversation this lawyer is having with Trump Jr. So again, it's kind of the usual reaction that we've seen when it's been focused on Trump himself, where potential disruptions to his presidency, and in this case to those very close to the administration, just bring about concerns over the implementation then of more pressing matters like corporate tax plans, infrastructure projects, trade deals, so on and so forth. It kind of elongates the process of those more important or market-sensitive issues being dealt with, and so usually creates a very quick risk-on environment. This has become even more evident, really, just coming due to the timing, because overall, I would say before this last bit of movement that we've seen, the trading conditions have been fairly subdued, in similar case to what we had on Monday, as the markets have been very much in a wait-and-see mode, wanting to hear from Janet Yellen in her first semi-annual testimony delivery, which she'll do to the House on Wednesday at 1:30 p.m. London time. Some of the move, though, here then on the back of this latest Trump Jr. news, we've had the S&P break. You can see it was a pretty quick run to the downside, and when we broke 24.19 and a quarter, that was really the defined of the low of the range from yesterday's session. We broke that as some of the selling took place, breaking S1. The momentum really picked up, likely a lot of algos jumping on that move in what otherwise has been a fairly lackluster session, so just taking advantage in that spike in volume and market movement. The classic flight to quality play, so gold saw a spike higher, as you can see. We briefly spiked up towards and over highs that were seen on Monday's session, and consequently US yields fell and the US 10-year had a quick test up at the high that was seen on Monday afternoon. Dollar weakness also occurred, so again this is a complete reaction to that news and concern about the administration, and as such, with the dollar weakness, euro dollar managing to make another push on the upside, and we're currently sitting at around the highs that were seen from Thursday, Friday of last week. The spike on the candle that you can see there in the middle of the chart is the payroll volatility, so we're up towards the upper bound of that price movement. We got just short of R2 on the break of this recent news. Looking elsewhere, some of the renewed dollar weakness helping crude, but crude back up to that key level. It seems to have really been a level to keep an eye on as well going forward, is that 44.48 or 44.88, around that level has been an area of significance that's been forming over the last kind of 3 or 4 sessions. Oil tends to be, or has been today, fairly volatile. Initial move to the downside, pretty similar really to yesterday's price action, some weight in the European morning to be countered then during the US trading hours, and we've had the same repetition of price movement today, defined by technically the same kind of area on the upside as resistance. Obviously we've got the API crude oil inventories coming out later on this evening. That will set the tone then for the DOE release that we'll get on Thursday, so keep that in mind as well. From an economic data point of view, we have had a couple of things out from the US this afternoon. First of all, we had the wholesale inventories number. It came in at plus 0.4% month on month in May of 2017. That was 0.1 higher than expected. So remember, generally speaking, the higher the inventory number, the more negative the read across for the health of the US economy. It was the largest gain, in fact, in inventories in 5 months, as automobile stocks rose by 0.7% amid a decline in sales. We also had the latest, talking of economic data, you had the JOLTS job openings, that number also below expectations. So although these aren't what you would classify as traditional tier 1 economic data pieces, they have come in weaker than expected. And we also had the NFIB Small Business Optimism Index earlier in the session for June. That was also slightly below expectations, 103.6 against 104.4. So a couple of things to be aware of. Overall though, the session, as I say, seems to be more a bit of a wait and see for the Yellen speech that's going to come. And remember, it's the House delivery is going to be really important, because the Senate delivery on Thursday is just a repetition of what's said in the first address. Already though, seeing pretty decent bounce in the markets after that very quick fast money kind of move on that fundamental news that broke about half an hour ago. And so we've already retraced back up to that 19.25 in the S&P, which is going to be another interesting level to have a look at again on this recovery back to S1 type area. Quick look at the calendar for tomorrow, just so you're up to speed if you want to plan ahead accordingly. Then overnight, a couple of inflation related data pieces coming out of Japan. You've got the PPI numbers overnight, shortly after midnight. From the UK we get an update, and more interestingly, not really about the number of claims or the unemployment rate in the UK, which has been a fairly healthy state of affairs. Really, much like in the US, it's the earnings situation that's actually going to be of more market interest, particularly prevalent in the UK at the moment, given these heightened inflationary conditions and the lack of wage growth. So the growing divergence between those two measures, which is putting all the more pressure on household incomes. So that data at 9:30 will be influential for the pound. You've got industrial production coming out at 10 o'clock Wednesday morning. And what will be interesting here, you've got the OPEC monthly oil report. That'll be just before midday. And obviously the measurement of global demand for crude, but also the level of compliance as well from the output from the various OPEC and non-OPEC nations is something definitely to be taking into consideration for intraday strategies at the moment. You've then got the Bank of Canada interest rate decision, and this is quite a big one, because we are, on balance from surveyed analysts, expecting a hike in interest rates of 25 basis points. If I just have a look at the last time we had an interest rate move from Canada, let's just have a quick look. So just bringing out my chart to slightly longer dated, we're in, if all goes as per consensus, this will be the first interest rate rise that we've had going back all the way really since the onset of the financial crisis. The drastic cut in interest rates that were seen really from 2008 all the way back down to what was then lower rates seen in the initial aftermath. We had a slight period of interest rate increases in 2011, stabilising, only then to decrease again through late 2014-15, and we've been the same interest rate for a considerable period of time. So that'll be definitely something to keep an eye on for FX traders. We also get the accompanying monetary policy statement from the BOC, so we'll be looking out for then what is their decision making for what they communicate for policy path thereafter will also be, which will also dictate the performance of the currency thereafter. Finally, you've got the crude oil inventories. As I said, you'll be really looking for the APIs to be your forecast, or to set the market's positioning at least for what the expectations will be for that 3:30 release. And then later on, for any one of those interested, I guess this is not part of our kind of classical products that we follow, but you've got the crop report coming out in the late afternoon, and you've got the Fed's beige book, so the kind of regional summary of the individual Fed banks. That'll be coming out at 7 p.m. But tomorrow, really the main event, and probably the main event for the week. There are some other things like inflation data coming later in the week as to some of the bank earnings to kick off earnings season in the States. But Fed Chair Yellen's semi-annual testimony, that's really the big one, and that'll be at 1:30 tomorrow afternoon. Okay, coming up towards 5 p.m. then, here in London. Going to sign off. Wish you all a great evening. I'll catch you for the briefing tomorrow morning. Thank you very much.